Hey traders, Nick Shaheen here looking at CVS. So this is a wild stock for some reason. And all right, so we're looking at, somebody asked me if it's a good time to go long it. At first glance it looks bullish, like it's attacking a neckline, it wants to break out, but let's talk to that. I'm going to mark it up with crayon and get a little creative with it, my artistic. Okay, so about a year ago, earnings, they said something great, don't know what, your homework to do that, and then they spiked, big gap, so they did this, right? So they gave it all back and then some. So technically somebody could tell you this was the very famous ladybug bearish pattern. You draw the legs and that's where the stock is going. No, seriously, that's what I call it. But this is an inverse cup and handle. If you look at it, it's a cup and handle upside down, right? It basically means that the bears were attacking a neckline here. The bulls said, no, we can defend it. They defended it, but they failed miserably. They defended it this is what they did the first time, the bulls. The second time they couldn't come even close, and they came back to the neckline. Once the neckline breaks, then the bears have momentum and they overshoot lower. How much? Technically it should be the stomach of the cup. Usually I look left to see if there are some places to stop. In this case, it played out completely. So they gave it all up and then some, actually exactly double almost. So if I draw the line, this is the whole fall from top to bottom. I think it's like 50% almost, maybe 48%. And if I draw a line right in the middle, that's the cluster where we're at. So to me, this cluster is magnetic, so it won't be easy to break out of it. So if I wanted to go along this stock, I'd rather sell puts. Where do I sell them? Tiffany and Company. Did I say CVS in the beginning? I don't know. I was looking at CVS earlier. This is Tiffany and Company. So it looks like the price action has support. This looks like an overshoot. This was an overshoot. This was an overshoot. Somewhere lies the truth. So if I were to sell something, I'd probably sell it here. Puts or put spreads depending on the premiums that are available. I'd rather do that than chase the calls. If I wanted to chase the calls or the stock, I would wait for it to break 110, 112, because this whole zone became pivotal. It's like the middle of the whole action. So bulls and bears clearly agree. It's literally the point of interest. So bulls and bears agree on price, so they'll fight it out. That's congestion. On the way up, it's resistance. I'm not saying you can't break through it. I'm just saying I wouldn't chase it until I see a breakout. 110 would be at least, 112 would be much better. And if the breakout plays out, it should be big, because this guy likes to move with the breadth. So take your pick. I don't know anything about his fundamentals, so we can check out the fundamentals real quick to see if we can see just from the PE perspective, just to give us an idea of what it is for the PE. 23. This is trailing 12 months. It's not that cheap, and it's 3 times sales, so it's not bloated, but it's not dirt cheap. I don't know what to compare it to. Anyway, Tapestry, I don't know their ticker symbol. It used to be Coach. Anyway, so I know stores like Macy's are really cheap, but it doesn't compare. Maybe compared to Lulu, it's cheap. So do your homework on the valuation perspective. From the chart perspective, yes, it looks bullish, but I would put a trigger saying, okay, tell me when it closes above. Maybe 110.50 would probably be I'm looking at candles where it last failed. 112 would be better. But this whole zone is, it all depends on how quickly you want to trade it. So if you want to buy it now, I'd set a stop loss somewhere. Definitely below 103. If it loses 103, then what are these two on earnings? Okay, so this is the look on Tiffany. There are other nuances, but I don't know the company, but this is what the chart's telling me right here.